Hello, welcome to the new episode of Macro Point of View Commodity News. And in today's episode, we're gonna focus on the wheat, soy, corn, and rice, as those markets received a report on a Friday evening from USDA. So we'll take a look on the balance, we'll take a look on the situation on the market, and we'll check what might happen in the near future on those markets. Stay tuned with us, don't forget to subscribe, and let's roll! Let's begin with the wheat, when we received a report which claimed that the situation on the wheat is pretty obvious and didn't change much from the last month. And we've got still higher consumption than production, so we are short almost 2.7 million tons of wheat this season. So currently this is very good information for the wheat, very good ground information for it. Also, we had some issues, including the problems on the Black Sea between the Russia and Ukraine tenses and the war, of course, but the tenses on export the wheat, and we had some attacks on the shipping ports from Russia. We've got some attacks to Russian ports from Ukraine, and on Sunday we had some warning shots fired by the Russian fleet towards some trade ship. So there is a lot of tension, and with the USDA claiming that there will be lower, much lower Ukraine export of wheat and corn for the next season, because as you can see on this graph on your screen, it's showing that we had higher export season 22-23, so during the war, but lower export of wheat, and the current season 2023 and slash 24, we've got much lower export of corn with almost estimated the same levels of production, and much lower again second lower season export of wheat. So this is a huge also mean, because if USDA show this kind of forecast, it means that probably United States won't follow the claims and the details and small things that Russia want to be served before restoring Black Sea Agreement to export Ukraine wheat and corn through the sea. So I think this is an unofficial, of course, notification that there will be no stepping back from sanctions from United States side, which will result lower export of corn and wheat this season. But yet this market is not complying with those data. As you can see, it's falling. It fell Friday, it fell today, and it's really hard to say what's going on this market. As you can see, I created a zone between 620 and 640, which should be support zone for those prices. So as long we are inside or above those zone, we are still able to reach 750, 800 cents per bushel on the wheat. So the fundamentals are very good. The fundamentals are saying it's gonna be better for the wheat. And we've got also some news from Europe. We've got a lower harvest in Germany, and also the production will be over 3% lower this season. Also in Poland, the production will drop on 7% year by year. So it should be pumping the price up. As well, we've got El Nino incoming. We've got already information that it's gonna hit Indonesian coffee fields. So I think it might also hit other ways as rice, as corn, as wheat as well. So this is gonna be very amazing season because we've got also some USDA information about the China. As you can see, they drop with their rising wheat production from beginning of the century up to season 2017-18. They then drop something, and now they probably will have a bit lower production than previous season 2022-23, but should be almost on the same level as 2021-22. And its current prediction, we don't know how El Nino will affect China. And also last season, this time of year, we had a lot of problems in China in both scales. First, we've got some droughts in some province of China, and on the second hand, we've got some flooding in other provinces of China. So it's, of course, it's a massive country, so it's not surprising that there is different weather there, but it should affect their production. So it's highly possible that this forecast of 137 million tons of production, wheat production in China for this season, will be too much, will be much lower in reality than those forecasts. So it all should affect those prices. So as I said before, a moment before, as long we are between 620, 640, we are in consolidation zone or support zone, and everything above it, it's opening the way up to 700, 750, and even 800 cents per bushel. So let's change to the soybean, and soybean on Friday had a little bit rising, and I'm also a bit surprised of it because the data from the report shows that we'll have overproduction, over 73 million tons higher production than the crushing. And this is really surprising. As well, we've got some information that China is importing more soybean from Brazil. So again, United States share of the China market will drop to around 30%. It was lower only during the trade wars created by Donald Trump. So now we've got still not so bad, but it's bad. So those rising price above 1400 on Friday was a bit surprising, and now I think we are on a good way to drop again, as fundamentals of the production and crashing are showing us south way. So I think we might see 1300 in the very near time on the soybean. So it's really hard to explain how the soybean will affect, because every time this pork market, or in general livestock market, in every meat market in the world will be shaken, it should affect soybean as well, as soy meal is basic farm animals food. So I think at the moment it's highly possible that the United States soybean will drop, as long we've got not so bad weather in the United States, but still we might expect that this will be affected by a lot of different weather conditions. Yet good weather in the United States with rising imports from Brazil to China by China should affect dropping this price down to 1300 cents. And I claim we will take a look on the rice, and for the rice I'm really surprised that this price is still so low. Global rice balance shows us that the production is lower than the forecast consumption, and as well we have, of course, fast and plenty rice in India because it's a very good monsoon time, and it's over 5% faster than last season. but yet we have very bad fundamentals, including, for the very beginning, of course, the export ban made by India for the most of the rice types. Of course, Vietnam is expecting to have 7 to 8 million tons of rice to export, and they already exported almost 5 million tons, which is 21% more than the last year. But yet, the India on the rice market is very, very important. So the export ban is very, very important. Adding this to Philippines, to India, Indonesia, countries which will be affected by El Nino, and there will be some drought because of El Nino, less rains. It should also affect their local rice production, which will, of course, result in higher import needs. So we'll have to take a look on those sides. Yet I think this rice is very, very underpriced because it should be much, much, much higher than 15 or 16 dollars. So I think, well, of course we should put some Fibonacci retracements here, and as you can see, 23.6% is a bit over $16, but I think the price of around SMA 55, around this 50%, so $17.5, should be at least the price of rice in the near future if El Nino will hit, if India will continue to keep the export ban on the rice, so it should be going up, up, up on the rice market. And for the end, we have the corn, and of course we'll start again with the market balance, and it's 13 million tons over production. Which is not surprising that we are now under 500 cents per bushel, because corn market is a bit down, and I'm really not surprised because we've got a bit higher acreage of corn planted in India. We have also already exported from Ukraine 1.5 million tons of corn, even if there is the new season started on the 1st July, and July 17th Russia said we stop Black Sea agreement for export. So it's not so bad, but yet we might see some problems because this market is oversupplied. So where we can expect this price to fall, and if we take a look, we are lower now than we were in the first quarter of 2021. So, well, I had here, as you can see, I made it in the fourth quarter. I didn't expect to go to 800. I was expecting to go to 600. Here, with 50%, it was great. But yet, I think we might be on a very good way to 400 level. And I think I will just move this one into 400, set it as our target price. And I will change it color to make it different. So as you can see, 440 is here because we had some problems here while rising in the fourth quarter of 2020. So now I set it up as probably at least a moment support, and the strong support will be 400. As you can see, it has a strong long history on this market. But currently the 500 is a very strong resistance for the past couple 1, 2, 3, 4, 5. So it's whole last week and the Friday and the Thursday from the first, well, from the changes between the July and August. So the whole August, well, mostly, we have this 500 as a strong resistance. It's not a support line, it's resistance. Of course, we might have such situation on the corn market as well, but I don't see it on those numbers. I don't see it on the fundamentals. So let's face it, this market will probably fall another 20%. That's what I think on those fundamentals. It's too much corn, and it's gonna be, of course, as a farm feed base will have a huge competition from the soybean, and as well not good enough, not high quality enough wheat, especially in European Union. So I think the corn is not so bright on the market, and this resistance will stay. Please do not forget to subscribe to our channel. Do it now, don't wait it. Like, leave a comment on this material, and share it with your friends on social media, Facebook, Twitter, Instagram, LinkedIn, everywhere you think there's people who need a very specific point of view on the commodities market. Thank you very much in advance. Have a good day and good luck on the market. See you next show.